All right, guys, back to work here tonight. Time to get ready for another big day tomorrow morning. It's Thursday evening after all. It is April the 2nd, 2020. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're here for the first time, it's great to have you with me because my job tonight is extremely important. Tonight, my job is to help us find the best entry setups coming for tomorrow. That's Friday's trading session. And I got a lot to cover in this video tonight. We get some charts already in the background. Got some oil, some E-mini, and some gold. Lots of big moves on the charts today. We'll talk about the best plan for Friday's trading session. And of course, speaking of Friday, we're going into the week tomorrow. Got some big news tomorrow morning. I want to make sure you know when to be trading, when to be sitting on hands, and we'll grab the calendar and make sure you know what the lay of the land looks like tomorrow to finish up the week. It's got a great video tonight for you guys. Charts are ready. News is ready. I'm here a little bit later than I'd like to be, so thank you so much for sticking around tonight here with me. Before we jump into the video, though, if you're here for the first time, you got to subscribe to this YouTube channel. I don't want you to miss the next video coming out next week on our next edition of our newsletter. So hit that subscribe button, hit the bell icon so you always get notified every time we publish something new. How about some questions tonight? If you have any questions about anything we talk about in the video tonight, drop those questions in the comment section below. And as always, if you're here every evening, hit that thumbs up button for me. If you tune in every evening on this video newsletter, thank you so much for supporting this YouTube channel by subscribing and hitting that thumbs up button for me. Don't forget, post those questions. I'll be checking questions after we publish the video here tonight. But enough of the introduction. Let's get this party rolling here. I'm going to kick off tonight's video by taking a look at the calendar for tomorrow, courtesy of Econo Day. Tomorrow, of course, is a Friday morning. We always know on a Friday morning the market will be, or our plan will be, early in and early out. You know, usually we trade every morning from 8 a.m. until about 11:30 a.m. Eastern time, Monday through Friday. Now, tomorrow, I'll be really paying close attention to the price action after 10:45. Really, after 10:45, you really got to have a good reason to be trading on a Friday morning after 11 a.m. Eastern time. So I would imagine tomorrow, the best setups here tomorrow are going to be in that window between 8 o'clock and 10:45 Eastern time. Again, we might be able to push it as late as 11 o'clock, but I definitely wouldn't think you'd be trading after 11 a.m. tomorrow like we normally would do on any other day of the week. So Friday mornings are always going to be an early in, early out scenario. And of course, we are still watching this kind of cloud hanging over these markets right now. We've got the virus spread that is pretty much on everyone's radar right now. You've got stimulus packages coming left and right from all these different central banks. Oh, and then why don't we just throw in a price war, right, with these oil producers right now? OPEC, we heard from the U.S., right, Russia and Saudi Arabia today. So we know the price of oil is on our radar right now. There's a lot to track right now. And of course, we're waiting, we're listening in closely to see if that curve will start to flatten out a bit on the expansion of this virus in places in Europe and the U.S. Will we get some more headlines about more of this free money, this easy money they're trying to inject into the markets tomorrow? And of course, what's going to happen with oil? You know, today we heard about that. Really, at this point, it's a rumor. At this point, there's been nothing agreed on. You would think this thing was inked on paper already, but the rumor is they're talking about some coordinated production cuts, maybe even some price floors. Right? We talked about this last night. This rumor's been building the last couple days, and we saw it come to a head here today. Can they hold this price? That's really going to be, I think, a big factor in tomorrow's trading session. Can oil hold this price? Because if they can't hold, right now we're about 25. If they can't hold that 25, there's a good chance we sink right back down to that 20, 21, 22. We're going to grab a look at that chart here in just a moment. We'll break that all down here for you guys on the chart here tonight. But these are some of the big kind of known unknowns as we go into tomorrow's trading session. Plenty of stuff that we're watching here for tomorrow. There's one thing that we know for sure tomorrow, and that is that employment number at 8:30 Eastern time. Now remember, in normal conditions, without the kind of cloud hanging over our heads right now about this virus spread, under normal conditions, this would be the big news of the session tomorrow. Under normal conditions, what you want to do is you want to give the news at 8:30, give it some time to kind of breathe and stretch its legs. In my experience, if the number comes out within expectations, the market will be choppy and sideways. If the number comes out outside of expectations, then usually we get a very volatile reaction to it. You boil it all down, again, under normal conditions, you really got to be careful trading between about 8 o'clock and 8:45. You got to be careful before that news comes out, and you've got to be careful those 5 or 10 minutes after the news comes out. My best advice to you, what I'll be trying to do tomorrow is stay patient between 8 o'clock and 8:45. The markets will either respond with a range or they'll respond with some pretty violent reaction, all depending on what that number comes out. Now, I'll be honest, we may not see the markets blink. This may be one of the most what's disappointing, right? This might be all show and no go. Usually the employment number on the first Friday of the month, the markets go crazy off of it. But I mean, we saw crazy price action today, for crying out loud. So, will the markets have more juice left in them for tomorrow? That is a big known unknown as well. The biggest thing right now, though, is be very careful in the overnight session. Usually gold, euro, things like that like to move overnight. Most of the time, and there's always an exception to the rule, but most of the time, remember, when you lead up to that big number, that non-farm payroll number, the big money traders in the market, the people who actually move these markets for us and provide the liquidity in these markets, they can't do much ahead of that employment number because it's such an unexpected, the potential volatility is so incredible. Now, again, right, overnight, be very careful if the markets aren't moving very much. Don't force it. They're waiting for tomorrow's employment number at 8:30. And then again, we'll be at our desks early tomorrow, right? Every morning, Monday through Friday, 8 o'clock Eastern time, and we'll have a front row seat for us, right, to trade that employment number. Not the actual number, but the response that we get afterwards. You're either going to see a range or you'll see a nice big trend expansion. We'll update our charts and we'll trade from there. Then after that, 8:45, right, all the way through to about 10:45, about 2-hour window there, that's where the meat and potatoes are going to be most likely for tomorrow. Will we hear more headlines about the virus, stimulus, and oil? We probably will, and I'll be definitely tuning in closely, right, and making sure all of our clients know every morning at the opening bell. Now, we're going to go over the plan here for tonight. I just want to remind you, though, we will be trading this plan every morning, Monday through Friday, 8 o'clock Eastern time. I'll put all the links to get registered for every morning's trading session in the description of this video. So if you want to come out and do it with us in the trade room, you got to be a member. I'll put all the membership information in the description of this video, along with a big button below the video tonight on the trading blog. So now you know, be careful tomorrow, be careful overnight with that employment number. Watch around that 8 o'clock till 8:45 block. Be ready from 8:45 till about 10:45, and be very careful. Try to force trades late in the session tomorrow. A lot of known unknowns right now. I'm very anxious to see what tomorrow looks like. Tomorrow could be a pretty bloody day. I'm going to warn you right now. Tomorrow could be a day where we have some major news. We have some exhaustion, and we may have some exhausted traders, some exhausted markets, and with that employment number, this could get really nasty tomorrow. Obviously, I'm an optimist. I'm definitely a perma-positive person, so I will definitely keep my positive mindset, but I'm definitely prepared for some grindy, sloppy markets as we kind of crawl our way into this weekend after all that volatility that we saw the last couple days. Now, jumping into charts here right now. Let's talk about oil, S&P, and the gold. I want to jump in here first at oil because everyone's talking about oil here tonight. And of course, oil was the reason why the S&P caught that big bid. And just in case you're wondering what happened here today on oil, about 10:30 Eastern time this morning, right? These markets pumped going high, pump being a very relative term, I guess you would say. The rumor was, well, we started seeing, the rumor was yesterday we're going to start getting some, price, some of the boost prices here. Today we heard from the U.S. President Trump, we heard from the Saudis, right? We heard from the Russians, and supposedly, right, they're trying to put together some extensive production cut. Now, We've been here before, haven't we? Is this fooling anybody right now? I don't think I don't think it is. Please tell me it's not, because we've seen this time and time again. Every time the price of oil is too low, right, to meet their targets, there's a rumor about some sort of production cut, and we get this big run back higher. A lot of times, within 24 hours later, we are right back to where this thing came from. It's been kind of a joke in the oil markets over the past couple of years that OPEC wants the price to go up. They whisper about a production cut. They never actually do anything about it. No one actually does the production cut, and the market falls right back where it came from. So today we hear some explosive news. The news causes this market to basically, right, take a run higher. And you'll notice what we're seeing here right now. The market jumps up, and they try once, they try twice. They're trying to go back and retest that high up there, right? Anytime we see a strong move in one direction, we know they're going to try to retest that high. Boy, these bulls really tried once, twice, 3 times, and this big move down, that should have been the nail in the coffin. They should have been able to hold that and run this thing back down to pretty much where this whole move began, which, by the way, I'll remind you, is that same weekly gap. I've been talking about this all week, right? That's the gap from last Friday's close down around that 22. So at this point, I'm thinking, okay, we got this strong move up. The buyers have feverishly tried. The sellers got the gift of the week. That was a gift right there. Why on earth, if these bears really wanted this, they should have finished the job off up here. We should be looking at this at $20 a barrel right now, but we're not. And that's what really kind of rubs me the wrong way right now. It makes me think here that we kind of have a tale of two ranges. We have a range around 25, if they can hold, because obviously, right, it's very obvious that they ran up, they tried. The bears got a gift on a silver platter. They got momentum on their side. All they had to do was finish off the move, and we sat here into the close. So it really tells me there's a magnet right around that $25 a barrel. At the same time, though, if they can't hold this area, the writing is on the wall. We got that big range down there. 22 is an easy magnet. 21's an easy magnet. I would imagine if these buyers can't hold this thing up, that 22 will be almost it'll be the easiest move they've had all week, getting back down to that 22. So I don't do this very often, but I don't like the long side whatsoever. I've seen this so many times before where they whisper about the production cut. It never ends up happening. And 24 to 48 hours later, we end up right back to where we are. So what I'm going to do now is I'm going to figure out how can I get short off the highs? How can I fade this oil spike, right? How can I use those buyers' momentum against them to sell it back down? And if we do run lower, I would anticipate buyers down here are picking some bottoms. So how can I avoid getting caught in some traps as the market goes lower? And trap might be the best word for that. So it's a little bit ugly on this. It's not going to be perfect here for tomorrow. But again, 2 ranges, one around 25, one down around 21. This is the same range we had right from earlier on this week. What I'd love to get, there are 2 basic patterns I'd like to get my hands on right now. I know I have the range. Whenever I say range, what do you think? Balanced market. Magnet right in the middle, right? What goes up comes back down. What goes down comes back up. When I say range, you think failures and you think breakouts, right? Those are the two patterns we're looking for. A failure pattern. Now, you got to remember, the buyers are going to want to retest that high. Okay, that's their mission. They want to get back up to get that 2740. And so as we try to make that run, I'm looking for buyers here to get caught trying to buy it, and I'm going to short off that high. Right? It's a little bit more of a contrarian view right now, I understand. But again, after seeing this time and time again in my career, and you probably have noticed the same thing, I'm very skeptical of being a buyer up here. Now, at the same time, if I can get this market running lower, I'm below the range, I would anticipate buyers coming in down here, right? Like a good range trader should, and I'm going to sell into their stop losses. So both of these patterns are going to be on our radar here for tomorrow. The first one, let's talk about selling off the high. If we run higher here, this momentum will feel very, very bullish. And the best way for me to get short off that is to use what I call a nested failure pattern. As the market runs higher, I know where they're trying to get to. I know they're going to start trying to buy pullbacks. I'm letting them try once, letting them try twice. And once I can see those buyers up top here trying twice off that pullback, now I know exactly where their stops are, and I can look to sell right into them. You can see a larger example of this here, right? Where we saw the move up, the 1, the 2, and then right when those buyers tried their second big push here, you can see everybody attacked it, right? And that's exactly what I'm looking for here once again. So I can get that run up. The moving average comes over. I'm looking for a failure, but it'll be a slightly more conservative failure because we're going against that overall momentum. I wait for 1, I wait for 2. If I can get a trap high up here, even better. Right? That would be the cherry on top, but the bottom line is on the pullback, 1, 2, and we go from there. Now, you might be wondering, what if this thing does continue going higher here? How could I trade a breakout? Honestly, I don't trust anything up here for the buy side. So what I'll do is I'll look for a 1, 2, 3 break higher. I'll mark up my new channel off that high. I'll find that big low way down bottom, find that hidden channel, and we'll buy off the low of that channel. But make no mistake though, we're going to see a strong move up, a pullback to the moving average, a strong breakout through. That's one of my favorite breakout patterns, the 2-try breakout. Mark up the high, mark up that big low at those bottoms, and buying the low right of that channel. Now we may also see this thing run up and then pull back from there. If they do get that top, doesn't make much difference here now. It's 1, it's 2, and look out below. We're selling right into those stop losses back down in. The only way I can be a buyer is if we run up, we hold that pullback, and we see some explosive movement through that high. I can then mark up that high, mark up that big low, and buy off of that low. It's going to be a very tight spot up there to be a buyer. You got to see some strength. You got to prove to us here, bulls, that you've got what it takes to go back up to that $29 or $30 a barrel. Because right now, I know I'm not alone. I don't believe you. Now, if we stall out and go sideways here, nothing changes. We still wait for the pop up. We wait for the 1, the 2, and back down in. If we go sideways and run lower, what's the plan if we go lower? And again, I would love to take this buyer failure and sell this thing right now, but it's just too late in the day to do it. And again, it feels like they're locked back into that trading range. I need some proof right now this is going to be a sideways range 25. And to do that, I'm looking for one of my favorite breakout patterns, a 2-try trap. I want to see a strong move down. I want to see a shallow pullback. That's the key, shallow pullback, and then trap off that high. This is a great setup whenever you know you've got those, in this case, you've got that breakout coming. I'm looking for that strong move down. And again, this is just me trying to go back to fill that gap at 22, right? I'm looking for a strong move down. That's the key. Once we see that strong move down, it's a shallow pullback. Usually it will not pull back to the moving average. That's usually your clue, that lower low, that trap high. And you know me, I'm always trying to find those channels, right, to sell off of. Watch that channel as we go. So those are my two favorite setups here for tomorrow. We go up and nested off the high. It's simply a buyer failure with one more try here for the buyers, or it's a strong move down, shallow pullback, trap high and go. Or we may see a 1, 2, 3 breakout. 1, 2, 3 breakout. That's fine by me too. Mark that low, mark that high, and we're selling off the high, right, of that hidden channel. All right. We've covered a lot here so far. Failure patterns, breakout patterns in range-bound markets. The best way to get a deeper dive into these patterns is to grab the free course. I'm going to link it up for you in the upper right-hand corner. If you can't be with me in the trade room, at the very least, grab that free course linked up in the upper right-hand corner. That way you can learn all my favorite breakouts, my favorite failure patterns, and you can make the most of our time together on this video newsletter. And again, don't forget, I'll put all the membership links to come out and trade with us in the trade room. I'll put that right in the description of this YouTube video as well. Or if you're on the blog right now at Sideways Markets, right, we'll put it below the video on the trading blog. That's the plan here for tomorrow. I'm looking to fade these moves as they go higher and hopefully try to catch some buyers down here, right, looking to buy that low as well. Let's keep going here. We got some crude oil looking good. How about some S&P here for tomorrow? The S&P is a mess right now with a capital M. Now, I wanted to make sure I zoomed out on this as much as I could because I want you to see what I see, and that is at first glance, it looks like, oh, this is great. This is a trending market, right? At first glance, it looks like we are bullish here. I should be buying pullbacks. That's what it looks like right now. But when you get a little bit wider out here, you begin to realize, this is actually one big range. That is an expanding triangle. And we are right up at those highs here right now. This is a lot like on oil, right? Where we got this bullish move, but I don't trust this thing whatsoever. I think the S&P got a bid because of oil today. I don't think the S&P would have gotten all that momentum going higher if they wouldn't have floated the idea about that coordinated production cut. So I know right now, what I do know right now is I know we are very bullish in the short term. I know that we are going right into that expanding triangle. And so what do we do at the top of a range? You know, look at that triangle like that, right? What do we do at the top of a range? We sell the top of a range. We don't buy the top of the range. We sell the top of the range. When I say range, what do you think? Balanced market. Imagine there's a magnet right back in the middle of that range, right? What else do we know? Two types of patterns, right? Failure patterns and breakout patterns. So what would be a good failure pattern for me to sell off the high here? We just talked about it on crude oil. We know we're very bullish. So for me to want to be a seller, I've got to give those buyers the benefit of the doubt once, twice, and then back down into that trading range. So if I zoom back in on this now, get a little more intimate here now on the location of this. We get going higher here, obviously. Moving average comes over. Buyers come in, they try once, lower low, they try twice. If I get a trap high on this, right, a trap high would be incredible. That would be even better if I get a trap high on this. But ideally here, as we go pulling back, 1, 2, and back down we go. Now, what if we slide back down? We have a trend line in our way. All right, I'm gonna quiz you here. What's the best setup now to avoid selling into support? No excuses. We just talked about this, right? When traps are necessary. We just talked about this. So if we have, right, if I'm right about this and the market sinks back down again, I don't want to sell this now, do I? I mean, I do, but I don't want to sell into support. So how do we trade that now? Right? So we know if we go up, we get 1, we get 2, we're good to sell high here. However, if this market now takes a nosedive going lower, what's the best pattern? Traps. What I look for is strong move down, shallow pullback, lower low, trap high, right? If you followed the newsletter last night, you know exactly what I'm talking about. That's going to be the key here if we can't get the short relatively far away from that trend line. So I want to be a seller at the high of this range. If I can get it quickly here, 1, 2, back down right into that trading range. If it pulls back, shallow pullback, trap high, And remember, I'm always hunting for those little hidden channels to incorporate with those trap patterns as we go back down into that trading range. Now, what if we end up holding this pullback as we go higher here, right? As we go higher, we hold the pullback and we jump. What is that called? It's a breakout pattern, right? It's a 1, 2, 3 breakout. Mark that high, mark that big low, buy that pullback off that new hidden channel. Where's my target? We got a lot of targets actually waiting overhead. 25.63 is that gap, the bloodbath gap, right, from 2 days ago. That 25.63, and then you get your runaway zone up around 2600. So if we do get that 1, 2, 3, breakout, mark the high, mark that low. There's my new channel, and I'm buying off that low. We may also see that 2-try trap breakout as well. Again, we know we have that level of resistance right there. If I can get a strong move up before I get to that gap up top there, a shallow pullback, a higher high, mark up that low, and ideally, just as we saw on gold, right? If I can use, sorry, that trend line's not very clear there. If I can use that level, that pattern would be incredible, right? That's a great opportunity there to be a buyer. So 2 breakout patterns, the 1, 2, 3 breakout, mark the high, mark the low, buy the low of that channel, or that 1 up, pull back, higher high. Again, it will usually be just above the moving average. Then mark that low, wait for that trap. And again, a cherry on top would be if we could use that trend line. Sorry, try to get that trend line to stay straight there, right? We can use that trend line like we saw on the gold today. And we'll grab gold here in just a moment as well. So 2 breakout patterns, 2 different ways to sell off of this high. We're back to the weekly gap here. There's a chance, it's not likely, but there's a chance that they sit here tomorrow. So if they do move this range higher, right? If they move this range higher, now this becomes a little bit more difficult, okay? Because now we got that big range below us. If we do see this market go higher here, what we'll look for is nested failures to sell above the high, going back down into that main range, right? Nested failures meaning we wait to go above the range. We wait for those buyers here, try to buy once, twice, and sell back down in, going back into that major range again. That again would be if we go sideways here for a very, a considerable amount of time, right? Couple hours here overnight, we start seeing that range develop there. I would look to keep selling back down into that trading range. That's some food for thought there as we go sideways here. And what if the market tumbles? Right? What if it tumbles back in? If we sit inside the range down here, that will be much easier, to be honest with you. If we run back into that range now, what do we do in a range? We buy low, we sell high. What are the patterns? Failures and breakouts, right? So we're looking for failure patterns above. We wait for the price to pop up. We wait for those buyers to try to buy the pullback, and I'm simply selling into their stop losses, going back into that range. Be careful, don't trade too close into that range, right? We want to be above that range as we go. What if the market goes 1, 2, 3 reversal? Oh, I hope it does. I really hope it does, because you know where they want to go, right? They want to go all the way down to that expanding triangle. That could be a bloodbath tomorrow. Again, I think personally, my personal opinion is not a reliable strategy, but I think personally, I think the oil price being so strong today has propped up this market a little bit. I think if that oil comes back down here, we're going to see this thing collapse right back where it came from here. If we do get this move going lower here on strength, they're going to have one big bullseye right on that low of that triangle. I've been talking about 2,400 here all week. It's a big price magnet for sellers. This might just be their opportunity here to get it, because it does feel like this market is a bit artificially propped up right now because of oil today. So if we do get that 1, 2, 3 reversal, don't be afraid to mark up that new channel. All of that momentum will be difficult to resist for sellers coming in off the top of that hidden channel. Remember, we're not trying to predict the reversal off that first pullback. Predicting reversals are very, very difficult to time your entries properly. I'll wait for that 1, 2, 3. and then sell off the top of that channel. If it really hits the skids and starts to run, keep your eyes on that 2-try trap as we go. You know, one of the easy ways to think about it is these trap patterns, which we talked about last night. As we get closer to those lows, the necessity for traps increases. So if we have the ability to 1, 2, 3 and go lower, I don't have to worry about traps there. I can sell off that pullback, no problem. But if the market turns over and runs and we start getting down into these key, basically the bottom of that range here, now traps do become essential. We wait for those shallow pullbacks, we mark those highs, and we sell those traps. And again, this will usually be just above the moving average. We'll usually have some sort of hidden channel to trade off of there. Not required, but definitely a bonus as we go back down to retest those lows. I really like, again, the chart it's a bloody mess right now, this chart is, right? At first glance, though, it does look very bullish. Look a bit wider here. And you can see we are just sitting right at the top of that trading range. I want to get short here in the near term with that nested failure, that trap above that high, or do they bloodbath and are we selling off the top of that channel as we go? Or, right, or do they make me sound like a fool tonight? They hold this pullback and run. I have no problem there. I have no ego on that. I'm wrong a lot more than I'm right. You got to be okay with being wrong. You can't let it get to you. Just update your levels and get back at it again. That's the way trading goes here. So be aware of that as we go. Time will tell here on the S&P. And don't forget, again, all the patterns talking about, grab that free course I mentioned in the upper right-hand corner. I'll put all the links for every morning's trade room session. To register as a member, I'll put all those links below the video tonight for you in the description, or that big blue button for you below the video tonight on the trading blog. Let's keep going. Let's wrap this thing up here on the gold here tonight. Gold, of course, as I mentioned before, right, we had that trend line that we saw here. Remember that trend line from last night? We went up, and you can't really see it very well here in a faster time frame though. Went up, pull back, shallow pullback, and trap high there. A great example of what was an expanding triangle, of how they used that move up, pull back, shallow, trap, and go right there. That may be exactly what we get on a market like the S&P here for tomorrow. So look at the gold right now. Talk about the tale of two ranges. We talked about two ranges at 25 and 22 on crude oil. This is another scenario here on gold where we have two different trading ranges that we're working with right now. The big daddy you can see over here, if I zoom out, this one is tough to ignore. This one is very difficult not to see. You can see that range right there. We're right around that 1650 area. Remember, whenever I say range, you think balance, right? You think magnet back in that area. But that ain't the only range on this chart. We also have that range back here at 1600. That range is, if they can't hold, that's where we'll end up back again. So you can see where these two trading ranges on both the oil and the gold here are really important magnets for us, because it's going to tell us we know where they're trying to go as they go higher, and we know where they're trying to go if they want to collapse here and go back down again, right back into that range. So that's probably the biggest clue, right? That is the biggest clue that we see here on gold. Let me zoom back a little bit closer here. Okay, what else do we know? We know we got two big ranges. We also know we have that big bull run as it went higher. Anytime we see this much strength in one direction, we almost can guarantee a two-legged pullback to support and a retest of that high. So we know we have that magnet overhead. We know where they're trying to go here. We know we've got a very strong bullish momentum move. Whenever I have a strong trend, I know I want to go with the trend. I want to use channels as key support, and I want to use measured moves for my targets. The channel here was relatively easy. I'm lining up these highs. I'm bringing it down to these lows. That seems to be a pretty easy channel. I really like this battle zone. I hope we'll get that pullback in the short term here. I like how we got some tops up here. Look how many bounces they got off that area. bounce, bounce, bounce. I mean, this is a beautiful buy zone there. I almost extended it a little bit lower here down to that area there. I mean, you really could extend that thing down if you wanted to. What you could do is kind of create multiple zones here if you wanted to. One being the kind of the first level, and the second one here being, if I kind of copy this down a little bit, right, put that there. So now you got kind of two levels of support here as we go. I doubt you're going to need the larger one, but that larger one obviously doesn't hurt to know where that level is going to be as well. So we know we're bullish. We want to buy off support. We've got a good idea of where that support level is going to be. My targets. We already know the range is the magnet here, but you probably have heard me say this metaphor before. Whenever it comes to finding targets, think of the chart like a rock that gets dropped in a puddle of water. You know what I mean? I know it's kind of sappy here, this metaphor, but imagine a puddle of water, and imagine you drop a rock in that puddle of water. What happens is the ripples, they ripple out from there. And as a rookie, we want to, well, really, not just a rookie, but as a rookie, it's very tempting to worry about the ripples, when in all reality, most of the information you need is right back at the rock. So the rock produces the ripples. And in order to find the best targets, it's usually going to be best you go back and look at where the day began. Now, of course, this is the kind of proverbial rock, right? This is the metaphorical, right, rock that hits the puddle of water. Everything ripples out from there. I won't take up too much of your time on this, but that's why I choose to use that first leg as my measurement. Then if I can get this pullback back down, I'm going to use that now. Obviously, I don't know how far it'll pull back right now, but that's going to be how I use the rock. You know what I mean? The kind of metaphorical rock, right? That's how I'll pick that target as we go lower. So I don't know exactly how far they'll pull back yet, but I do know though, if they pull back to lower the channel, it'll be there. If they pull back deeper, it'll be a little bit deeper. A lot of times what happens is you can kind of almost like reverse engineer it. You know what I mean? If you know that the magnet is that range, a lot of times these markets, they're spooky like this, where they'll almost like reverse engineer it, and it's like that's where they're going to buy. It's like buyers will look at this, go, okay, I know that's the measured leg. Okay, deduct the 3, cross the T, right? Okay, that's where I want to buy down there. I'll bet you're going to see a lot of buyers down in that area. The big question is, will we get that pullback? That's the big question right now. So we know we're bullish, want to buy off the low. I know where my target is. Depending on how far we pull back, we'll go forward from there. My biggest thing right now is what does the pullback look like, right? Do we see a relatively modest pullback to the low of that channel, where I can use a seller failure into a pullback combination? One of my favorite combo setups, right? We pull back, the bears try to get short off the moving average, they fail, and of course buyers can then buy the pullbacks from there. Or do we get a lot deeper of a pullback, right? We get that pullback down to that 16-14 area. Do we see a deeper pullback here now? Now, same idea here. Because we're not bearish yet. We don't turn bearish until they hold that pullback, right? Remember that from our newsletters before? So what we'll do now is if they get that strong move lower here, now what I wait for is I wait for the nested, the 1, the 2. Now those nesteds, they almost always give you that snap into that 2-try trap before you run back up to retest the objective now, which is the high of day. And then again, depending on how far that pullback is, it might be the measured move of the high of day. We just don't exactly know how far the market will pull back yet. But again, if we get that real strong move, if we get all the way back, guys, if we get all the way back to that 16-12 area, I'm looking for a nested failure. We'll buy into stops there. And then again, a lot of times they'll shoot higher. The moving average comes over, right? You don't exactly get the pullback quickly. It's a trap low off of that low. And again, think about how you can draw some channels on here to find some additional levels of support before you get back up to retest the high. Just don't buy into that high of day. Focus on traps as we get closer to retesting those highs. Now, to kind of go back to what I was saying earlier, if we do get that pullback, very strong pullback, and then we see them hold that that bounce off the moving average, now this is a reversal. And at that point, I'm going to mark up these lows. I'm going to mark up that high. And I want that to be a wide channel because I don't want to be trading inside the zone, right? I don't want to trade inside the range. I want to wait for market to get up so I can sell the high of that channel. A 1, 2, 3 reversal into a hidden channel pullback. We see a lot of these every week. I put a lot of them inside the free trading course. As I mentioned earlier, the links in the upper right-hand corner and all the links you need to get registered for every morning's trading session is in the description here below. So if we do hold this thing 1, 2, 3 right off that moving average, now we know we've got the reversal, and now we can get short pretty confidently off the top of that channel. If this thing turns bloody, right, and heads lower here, if it really rips lower, oftentimes that first pullback will not get the moving average, and you'll want to get that trap. The giveaway, again, is that first pullback won't pull back to the moving average all the way. And again, I'm always kind of looking out here for where can I find some levels of support that I can turn into resistance and use overhead, right, for that sell. Those are two great reversal patterns as we try to go back to that 1600. Now, we may also see this thing continue to go up and go sideways up here, right? We may get back up into that range. And if we sit here going sideways for a while, I would say at least an hour, 90 minutes going sideways up there. If we can stay sitting sideways for a while, that basically confirms that Big Daddy range we talked about earlier, right? So if we do get pinned up here, what happens is the buyers don't take profit, nobody dares to sell it, and the market goes sideways. If that's what happens, we now know it's a range. What do we do with ranges? We fade the breakouts. We use the range as the magnet. What are the two patterns? Failures and breakouts. As we pull back underneath the range, we wait for that pullback. We wait for that moving average to come over. The sellers will try to sell off the pullback, right? And we'll buy into those stop losses. A seller failure pattern. Hey, if I can get the low of that channel, even better, right? Even better. That will be ideal as we come off that low. But don't forget, if those bears, if they hold that move, if they hold it and we run, who cares? Now we're bearish. Now grab that, right? Grab that channel now, and we're selling off the top of that channel. That is a breakout pattern. We don't trade breakouts, right? We wait for the 1, 2, 3 breakout and we trade the response to it. It's a much more reliable strategy. So now we've got ourselves pretty much planned out, I think. I think we're good here for tomorrow. We know the plan if the market goes sideways up here. We know the plan if we get a shallow pullback, right? Shallow pullbacks, that failure into pullback special, or we get that deep pullback with that 1, that 2, that nested into 2-try trap we just talked about, or do they hold it and we dump back down into that trading range? There is potential. There obviously is possibility here. We may make a run for those highs up at 1700. It does seem a little bit unrealistic tomorrow, but it's a non-farm payroll number Friday. So who knows, right? Who knows what could come out the gates here tomorrow around that news number at 8:30. If we do see a 1, 2, 3 break higher, I do want to see some strength going through that high. If we get it, I can mark up the high, mark up that low, find that new channel and buy off of that low, or that strong move up, shallow pullback, does not touch the moving average. Usually it won't. Sometimes it will, but usually it'll be just a little bit shallow. That's what tells you higher high in price, trap low to finish off that job up around 1700. All right, guys, I think we've covered all the bases here for us today. I'm looking forward to tomorrow's trading session. It's going to be a little bit bloody, I think. The big variable right now is, will we hear more about the price of oil? I think that's going to be a big factor as we go into the weekend here and, of course, into, it'll be week number 4 for quarantine here in Los Angeles. I'm not going to lie, I'm getting a bit stir crazy. I would kill for a haircut right now. I'm sure you can feel me on that. Boy, oh boy. Start growing a mane out here right now. Anyways, hope you guys had a great day out there. Don't forget, come out and trade with us every morning, 8 o'clock Eastern time as an advanced member. I'll put all the links in the description of this YouTube video. And don't be afraid to call me in the office. I'll be here all evening, and tomorrow, call me anytime, toll free at that number there, and I'll pick up the phone and help walk you through everything to get registered. If the phone isn't a good fit for you, use that live support tool. And as always, guys, if membership isn't quite right for you right now, make sure you grab the free trading course. I'll put all the links for that in the description of the YouTube video or right below me here tonight on the trading blog at Sideways Markets. I want to thank you so much for another great week here on this newsletter. I know things are tough out there in our personal lives right now, so my heart goes out to everyone being affected by this. Stay strong, take care of one another, right? Be nice to people around you. We're all battling through this stuff together right now. But remember, as a trader, we've got a job tomorrow, early in, early out, those 2 hours between 8:45 and 10:45. That's what we want to be focused at tomorrow. Keep in touch. Be careful overnight here tonight. And if I don't see you guys tomorrow morning in our trade room, come back and see us again next week on our next edition of our nightly newsletter. Don't forget to subscribe. Hit that thumbs up button. Drop those questions in. And we'll see you guys next time. As always, my name is Joseph. Be well out there. Be nice to each other. And be here next time, will ya? Adios, amigos. Bye-bye for now.